Hello everybody, I'm Aaron Hazelhurst. Welcome to the program. Of course, always good to have you with us, and of course we'll talk about the ongoing sagas in the Eurozone, but let's talk about the excitement and the anticipation building with these guys. Facebook, it is set to announce the price of its share sale later today. Now, shares are due to start trading tomorrow on Friday in a debut that could value the company at more than $100 billion. That value will certainly be more than the likes of Ford Motors, Disney or Kraft Foods. Originally, the stock market debut was forecast to net Facebook up to around $11 billion, but a number of Facebook founders and large private shareholders have decided to raise the amount of stock for sale by a quarter. So now the IPO could raise, there it is on the screen, $15 billion. Facebook co-founder, the very young 28-year-old Mark Zuckerberg stands to earn just above $1 billion. That being cash, mind you, from the sale, but he will also still retain a voting majority in the company. Other early investors are cashing in as well. Our partners could get nearly $1.8 billion, and the investment bank Goldman Sachs around $1 billion. Well, let's go straight over to the floor of the New York Stock Exchange. Michelle joins us. Michelle, great to see you. Let's start. Well, actually, I should say, before we talk about the question marks facing Facebook, let's talk about where you are. The excitement, the anticipation, surely it is building.
Certainly people around here have been talking about it a lot over the last couple of days. What will the share price trade at during its first day on Friday? Not much longer to find out. Now, of course, the reason for all of this hype, the reason you and I are talking about it, is because of the huge popularity of this website. Back in 2004, by the end of its first year, it had around some sort of 7,000 users. By the end of 2 years later, it had around 12,000. Now you look at it, and as of the end of March, it had over 900 million users who logged on at least once a month. Now, this is the reason that people are sort of so excited about Facebook. It's considered a huge successful business story, and now potentially one of the biggest public share flotations as well.
Yeah, absolutely. Now, Michelle, here's the problem. So some will say, so many experts have been telling me, Facebook will be worth more than the likes of Disney, Ford, Kraft Foods. Here's the thing, Ford, Kraft Foods, they make stuff, they sell it, they hopefully make a profit. How do you value a company at $100 billion that doesn't make something and then sell it?
Well, that is the billion-dollar question, I should say. If you look at Microsoft, obviously they make software, but when they went public back in the 80s, they went public for $780 million. Now we're talking about this company going public and being valued at $100 billion. And so I guess people are nervous naturally about whether or not this company is worth it. Going back to that figure we talked about earlier, 900 million users, well, that's how many users they have on a regular basis, but they only make a couple of dollars on each of those users. The way they do that is through display advertising and essentially making money sort of off the story of our lives through the ads they place around it. The question is, how successful are they? General Motors, the car company, waded into this, pulled their ad budget from Facebook, saying they didn't think it was that successful. Ford, another company, car company, said they thought it was very successful.
Yeah, no, absolutely. One to keep a watch. I can certainly tell you they don't make any money from the story of my life. I'm not on it. But anyway, Michelle, we'll talk to you very soon. Michelle Fleury joining us from the floor of the New York Stock Exchange. Okay.